Hey everyone, welcome back to another midweek market update. So let's run through a few things very quickly. Focus would be definitely on the Japanese yen pairs, and you can take a look at the dollar Japanese yen here. We had that bounce from 149, surpassing 150 level again. Now this is on the back of the comments coming up from the Bank of Japan in terms of their YCC. They're still keeping it at 1% as a reference point, but I'll be honest with you, the YCC is pretty much gone, but it wasn't in an official statement, so we see a little bit of a pressure on the Japanese yen. We can see how weak the Japanese yen is. This is a 33-year low for the Japanese yen. This is very close to 152. Right now, if we take a look at the movement for today, market does gap down a little bit this morning, and technically this is still way above the Ichimoku cloud. This is opening above the daily pivot as well. So in terms of potential pullback, we do anticipate a pullback towards 150.80 at best, and from then on we still anticipate more gains on the dollar Japanese yen at this point in time. Potential gains for this one here, obviously 152 is going to be the next level. A lot of traders are going to be targeting. We are potentially going to be looking at push higher towards resistance 1 on the daily pivot. That's closer to 152.50. Now again, this is also reflected on the other yen crosses as well. This is on the sterling yen. We saw that bounce from 180. This is way above 183 right now. Technically it was above 184, so the same gap happened. We saw the market gaps down a little bit, but at this point in time, for as long as it's still trading above 183, we're still going to be looking for opportunities intraday for further continuation to the upside for the sterling yen, the dollar Japanese yen, as well as the euro Japanese yen as well. So the euro Japanese yen, very similar situation. Market does gap down a little bit, but we are still above the daily pivot. And take a look at the momentum here, and as well on the stochastics and the RSI. Stochastic is about to reset itself now. In terms of retracement on the euro Japanese yen, we can see the retracement here is pretty much limited to about 38.2. We are going to be looking at the daily pivot at 159.75 to act as a little bit of a support for the euro Japanese. So I expect more traders to buy back on the dip here. We're looking at about 159.50, 159.75 as a potential buy-in for the euro Japanese yen. Now let's talk a little bit about the euro USD. This one here is kind of exceeding what we want to call for a flag. This is currently on the 21st day, so whether or not it's going to break today, this is the final day for it to kind of confirm the flag patterns that we have here. So today's the 21st day, and if it needs to, and if it wants to break below it, we would consider today's break as still be a part of that flag patterns. Now obviously this one here, we saw how the rejection happens. It pretty much is at that range between 1.0650 to 1.07. Now taking a look at it from an intraday perspective, this is back below the Ichimoku cloud. So any pullback intraday, we might see a little bit of a pullback potentially towards closer to 1.06. But any rejection from 1.06, we anticipate further drop on the euro USD. Similar situation with the pound USD, but not as intense. But the pound USD here, this one here is still well supported at 1.21. In terms of resistance, we're definitely going to be focusing on 1.22. All right, just before we wrap up for today's review, let's take a look at gold. So gold has finally broken through that support trend line we saw on the hourly time frame. This has transitioned back below the Ichimoku cloud. Now this is potentially market pricing in for the FOMC today. Depending on where you are, it could be tonight, it could be Thursday early morning for you. But the FOMC, in terms of their interest rate decision, market is not pricing in for a rate hike, but from what we saw in terms of how the market has been moving, I think the market is potentially anticipating for the FOMC to be a little bit more on the hawkish side. So we saw that pullback happen. Even on the daily time frame, we saw that break below 1985 support level on gold. Right now, we're potentially going to be looking for a little bit more of a deeper correction for gold. Shouldn't exceed 119.50, and unless the FOMC does hike by 25 basis points. If the FOMC does hike by 25 basis points, we might actually see gold moving closer to 1950. But at this point in time, we still got 1975 as a little bit of support. Not ideal to buy in gold at this point in time. I know it looks like it's a discount, but I think there's a lot of risk involved considering the FOMC interest rate decision today. It's going to impact gold significantly. If the FOMC does not hike, then that's probably cue for more buying in gold. But at this point in time, if the FOMC does hike by 25 basis points, it could cause a little bit of a bigger slide in gold. So that's the risk involved in trading gold. So I think a lot of focus for a lot of traders is likely going to be that trend continuation potential with the yen crosses. I think that was probably going to be the market moving event. EURUSD is also prone for that flag pattern to kind of realize itself today. So today's the 21st day. If it's going to happen, today's going to be the last day that it could happen. All right, so with that, good luck with your trades. A lot of news to go. We've got the FOMC. Tomorrow we have the Bank of England. On Friday, we have the NFP and the US unemployment numbers. So good luck with your trades, and I'll see you soon.